All right, well, let's talk more about all of this. CFRA Research Senior Equity Analyst Angelo Zeno is standing by to join us with more on Alphabet's third quarter. So first of all, just give us your big picture top line reaction here, Angelo.
Yep. So thanks for having me. I guess, overall, I mean, you guys kind of, did a good synopsis of it, but overall, the numbers were good. Revenue, I believe, grew 15%. Earnings was $2.12. That would kind of, beat the expectations out there. I think revenue Street was looking at for about 12% growth, EPS of about $1.85. They don't provide kind of guidance in the press release, so we'll kind of wait for some qualitative data on the call out there. But overall, initial reaction is good results. I think kind of you pointed towards the Google cloud side of things, and that's really kind of where there was a really nice beat from where our expectations were. And I think even kind of when you look on the Google Cloud side of things, in terms of the margins, their operating margin was about 17% or so is what I have. And that is by far the highest operating margin that they've ever posted on the cloud side of things. The prior quarter was 11%. The prior quarter before that was about 9%. So they're executing extremely well on the cloud side of things in terms of the operating margin. And the overall margins kind of held up where we expected. I would say kind of, I know you kind of alluded to the kind of the expense side of things. If you kind of look, based on what they spent at least this quarter in terms of, equipment, it was about $13 billion. Kind of our expectation was, they need to keep it in that 12 to $13 billion quarterly run rate, which is kind of what the company had been alluding to here over the last couple of quarters and kind of going through the rest of this year. That's what they kind of kept it at. So that's definitely a good sign out there in terms of kind of the spending levels that we saw here this quarter, which is probably helping the stock kind of move higher here.
What about the AI evolution in search, Angelo? How you think about that, what that means for this name, not just near term, but as you try to map out what it could also mean long term?
Yeah, I mean, listen, that is the biggest question out there for Alphabet, and I think it's why a number of individuals out there have kind of been hesitant on the Alphabet story here. And the way I look at it is, we're believers of Alphabet and kind of how they've evolved their business over the years and over the last 2 decades. And this is definitely going to be a trying time for them, and they're going to have to figure it out and kind of really innovate quickly. But what we've seen thus far in terms of how they're innovating on the AI overviews side of things, and we definitely want to hear kind of what they're seeing in terms of the monetization side of things. As far as that is concerned, on the call, we expect them to fully talk about that. But thus far, I mean, I'd say we're pretty encouraged with how they're kind of adapting to things here. Clearly, the competitive pressures are going to intensify here over the next couple of years, not only from the Microsoft's OpenAIs of the world, but kind of saw some news on Meta as well. There are going to be different ways people are going to search here over the next couple of years. But that said, we think Google is going to be they're going to be able to figure this out, and we think they're well positioned.
In the release, Pichai also highlighting YouTube and that total ads and subscription revenue there up surpassing $50 billion over the prior 4 quarters for the first time. I mean, I feel like a broken record every quarter because I always kind of say, is YouTube sort of the hidden gem within, but it's not hidden anymore, I guess, if we keep saying that, Angelo. How important, though, is YouTube for Alphabet overall? And kind of what's the interplay with the other businesses as well?
It's important. I think it's a very important business for them. It's growing very nicely. It was probably the business segment that really disappointed most in the second quarter. It actually kind of exceeded our expectations here in the third quarter, not only on the ad side of things, but on the subscription side of things as well. And it also, provides some nice diversification for them outside of the search side of things. So it is a critical part of their business and supporting, clearly the investments that they're making on the AI side of things and across other aspects of their business, they can kind of trickle here on the YouTube side of things as well. So, for a number of reasons, because it is a good growth story, because we're kind of big believers on the whole kind of shift towards the connected TV market and kind of the advertising opportunities on that side of things. And ultimately, the fact that it does provide that diversification, again, away from search a little bit, I think are all kind of key reasons why you have to like the YouTube story here within Alphabet.
Do you think, Angelo, there is a new CFO here as well, and Anat Ashkenazi? I saw some of your colleagues on the street kind of wondered if that hire could mean a change to this company's guidance approach going forward. What do you think?
We'll see. I mean, it's possible. I mean, I don't expect it to change much, to be honest with you. At least not on this call. But Alphabet has kind of been among kind of the Mag 7 names has kind of provided the least amount of information out there in terms of forward-looking guidance to investors out there. So we'll see if that changes up here in terms of some of the commentary that they provide on the call here. We'll know, shortly. But that said, I mean, listen, I don't think they're going to rock the boat too much here in terms of how they kind of have approached things here over the last couple of quarters. I think, personally, the one thing I'd love to see her do here, and it's not going to be on this call or here or likely over the next 3 months, is I'd love for them to kind of get a little bit more aggressive in terms of the capital allocation policy because of the amount of cash they have on hand out there. But that said, we'll kind of see what happens.
Angelo, how much of a cap on this company's stock price is the regulatory overhang?
It's a great question. When we kind of look at the stock here from a valuation perspective, right, I think this stock is trading now close to about 16 times our 2026 estimate, on a net cash basis or slightly under that, before the move that we've kind of seen here in the stock price. So when we kind of look at kind of other names out there, specifically at the Mag 7 names, and even when you look at maybe Meta specifically as maybe that's kind of the closest peer or name you would kind of look at relative to Alphabet, which is, trading, I think, north of 20 times our 2026 estimate. I would say that's kind of the deviation out there. I think the stock should easily be trading 20 to 25% higher once we get greater visibility kind of on the regulatory side of things for Meta. That said, I mean, you're probably not going to get any great visibility on that side of things here for a while, right? Next summer is probably when we start kind of getting some commentary from the courts out there on how they want to tackle or handle the or the remedies that they want to come out for based on kind of the outcome that they announced back in August. But that's going to get appealed no matter what from Alphabet. So this is going to play out in the courts for a couple of years. And I think investors just need to start getting comfortable with that. But that said, I mean, listen, we were kind of going into these numbers among kind of the Mag 7 names. I think this is the one that I was kind of most confident about because of the hate kind of going into the numbers here, given the valuation and given some of those regulatory concerns out there. And our view is Alphabet will be able to, again, navigate kind of the storm here. I don't think some of the kind of the headwinds and negativity that you've seen out there from a lot of investors is necessarily going to come to fruition for Alphabet.
Angelo, call starts shortly. If you have the chance to ask executives any questions, what would be top of mind after reading through this print?
Yeah, I mean, listen, I think kind of, in our view, it's, what's the digital ad landscape going to kind of look like going into 2025? And they're not going to kind of highlight that or kind of their views on that side of things. There are clearly some tailwinds that they're getting here in the third quarter and likely going into the fourth quarter in terms of the election and some other moving parts out there. So tougher comps are going to, make the story a lot more difficult in 2025. And, the other thing we kind of do want to know is what are the opportunities and monetization potential here on the AI side of things, not only on the cloud side of things, but, within the search side of things. Specifically, though, as far as cloud is concerned, I think, the beat and raises on the cloud is much more important than on the search side of things because the street kind of really is they're big believers on the cloud side of things. You don't necessarily have some of the regulatory scrutiny on the cloud side of things the way you do on the search side of things. So the big reason, the fact that we did see the beat and raise here specifically on the cloud side of things, I think really kind of helps the story here.
Angelo, thank you. And stick around. We're going to hear from you later on as well.
All right, thanks.